Cameron Brownjohn from Federation Asset Management. Welcome to the Alternative Symposium.
Thank you for having me.
Can you explain Federation's approach to sustainability and why it is a focus of your business?
Federation's a private equity firm. We believe that if we invest in ESG savvy ways, that we're more likely to protect our investors' capital and grow with it from there.
And what's the specific investment universe for this strategy?
Well, Federation's investing across the Asia-Pacific region with a focus on Australia and New Zealand. We would have strengths in the care sector, healthcare, aged care, disability care. We would have strengths in financing businesses, which we think is really interesting in the current environment against the ageing population thematic. And we have strengths in other sectors like technology adjuncts to old school businesses.
Is that because those asset classes or asset types are better suited to private versus public markets?
Well, we think so. By contrast, we're not strong at everything. So Federation is not strong at retailers. We're not strong at manufacturing businesses. We're not strong at consumer discretionary businesses. We think that there are other listed firms that are better able to access those opportunities than us, and there are indeed other private equity firms that are stronger at those sectors than us.
There's been a bit of activity in your portfolio companies lately. Could you walk us through one of the recent transactions?
Thank you, yes. Well, we've just exited George Health, which is our contract research organisation. That's been a good outcome for our investors, near on a 60% IRR since an investment. Many times entry money for our investors. So that's a positive one. Equally, Windlab, which we co-own with Andrew Forrest and his concerns, is also performing well. We entered that in 2020 and we are already money good after exiting its international non-core operations. More broadly, Federation's portfolio is tracking at 22% return since inception. And that tracks pretty well with the over $4 billion of exits we've now had at an aggregate IRR of 23%. And those $4 billion of exits has been since 2011. So consistent with our long-term track record.
And you recently invested into a major renewable energy project. Could you expand on that opportunity?
We've got a few of them. Yep. So we're building wind farms all up and down the eastern seaboard and in other parts of Australia. We've got a major battery. It's a big battery. It's 150 megawatts and it's Tesla's lithium-ion technology, which lasts for 2 hours. So a fully contracted 300 megawatt hour battery. That's big enough to fuel the residential sector in Canberra, say 2.5 times over.
How big is that in acreage?
Imagine every megawatt's about the same size as an intermodal freight container. So if it's 150 megawatts, imagine 150 of those plugged together in a complex Lego set.
And in which sectors or asset classes are you seeing the greatest opportunities at the current time?
Yes, thank you very much. I think that there is palpable opportunities in the ageing population thematic. At the moment, we really like financing businesses into that, and we're diligencing a range of them. We're also in late stage due diligence in a range of care businesses, whether that's plugging into Australia's National Disability Insurance Scheme, which we think is a really exciting opportunity set, as well as a range of other healthcare services businesses. And then I'd group another opportunity set under other. There's a bunch of esoteric other opportunities that we would have privileged sourcing access to. I think it's probably the opportunity or the environment where you want to be quite cautious with your opportunities. And so I guess I'm pleased that my colleagues and I have invested in less than 1% of the things that we've historically found. So we'll just be patient and picky as we work through those diligence programs.
And is public market volatility open more opportunities in private markets?
Can do. I think the traditional arguments for why you would invest into private equity would be, generally speaking, the propensity for greater returns relative to listed equity and also the propensity for diversification. So we would argue, as a part of any balanced portfolio, professional investors should have an allocation towards private equity. The Future Fund has an allocation towards private equity that exceeds what they've got in their listed allocations at the moment, for example. On the return profile, equally, the returns of good private equity managers over a long period of time have exceeded the returns of good listed equity managers over a long period of time. And I think that one of the reasons that people are able to do that is the avoidance of short-termism. Private equity firms don't tend to solve for quarterly earnings results and market volatility, and more could use that volatility as good buying opportunities.
Cameron Brownjohn, thank you.
I'm grateful for having me. Thank you.